Thanks for joining, and just quick round of introductions, and then we'll get rolling with our first app presentation.
Awesome. Mike Dudas runs Sexman Ventures, early stage firm, investing primarily at the app layer, so not in blob and block space for the most part.
Hey guys, Anil, Lulla, CEO of Delphi. We basically have three main divisions: research, ventures, and labs. Just kind of super bullish crypto.
Hey, Kevin, head of growth at Monad. I've been leading growth at Monad for about 2.5 years and have just under 3 years of venture investing experience at CMS Holdings before that.
Hey everyone, I'm Alex, founding partner at Hack VC. We've got a little under $1 billion under management. We mostly do infrastructure, but all over the stack. I've been a crypto VC since 2014. I've backed a few hundred companies and protocols and projects over the years.
Fun fact, we went to the same high school.
The same
I was
class,
there like
too.
a decade and a decade before you. I'm a boomer.
No, we're the same age. You could tell, right? Yeah. I either look too old or you look too young. Something like that.
Check. Small world. So our first presenter, let's give it up for Anatoly from spots.fun.
Woo!
Cool. So, hi everyone. PalmFund has generated over 700 million in revenue. Good for them. But what if that's just the tip of the iceberg? Because memes have always been around us. Long before on-chain, they were already driving massive value in real life. Just recently, the Louvre announced they're gonna create a separate entrance just for those who want to see the Mona Lisa only. Because people fly in from around the world just to take a random picture and having no idea what else is in the museum. They want to say, I was there, I saw her, I'm in. That's a meme, IRL. Statue of Liberty, famous taco spot, they are all memes, just without a token, yet. Spots.fun lets you ape IRL. We let you interact with physical world exactly the way we Digians interact with crypto. How that works. When you like some spot like restaurant, landmark, you open our app, find it on a map, put a pin and create a meme coin for it. Or you can buy it if there is already one. And that creates a triple effect. First, a recommendation. When you create or buy a token for a spot, it's not just a random star or a like. It's a real signal backed by real money. People notice it. It's a new social alpha. And second one, you support local sports. When you ape a restaurant, you amplify it. You literally help them to bring new clients. And you build a mini community, a squad of token holders that believe in the same place. And third, you monetize your taste. You ape early, token pump, you profit from your ability to sense the culture. Spots.fun turns your city into a playground for exploring, aping, memeing. How do we plan to get users? Well, as Alliance alumni, we have unfair advantage. We already have a long list of other Alliance members who will use our app, and we have great marketing support from Solana Foundation, thanks to them. That's gonna be our fast wave of users. How we gonna scale? We plan to push hard on viral mechanics. And the core viral loop is when you ape a sport, you have many reasons why you should post about it on your socials, because people still want to be early. They want to share that they have taste. They want just not to post for vibes. They are posting a recommendation, a new alpha. That's how we keep our flywheel spinning. Users post about content about spots that creates more ape pressure and brings more users. So aping IRL is not just a concept, it's a vibe, a movement. So if you want to be early to get invite code to try it first or send us a term sheet, follow us on X, spots.fun. Thanks.
I'll start. All right. So walk me through. I download spots.fun. I sign up. What is the first? What do I do?
So you have a map with your location. So you can see on a map different spots range from different range, like based on our algo, like top spots, trending spots. So you can explore on a map. You can zoom in, zoom out, and see what's like a top spot.
And this is based on your information.
Yeah.
Nothing about me at this point. I'm not importing data from my Google profile or
Yeah, exactly.
Okay.
So that's based on like meme coins created in our app. And we also use information that for every day that you're not selling meme coins, you earn points.
So I log in and I'm seeing a map with spots, and the signal of what things I'm seeing is based on what's hot, based on other folks who have created meme coins
exactly,
around
on the community.
spots. Okay. And then is it the individual, or is it the business or the spot? Who's creating those markets?
It's UGC content. So users create spots, random spots, no categories, nothing like that. You just put a pin on a map and create a description for it, and we create a meme coin, and that's it. So you can create.
And then what's my incentive to create a meme coin?
If you want to share some alpha, you believe that you know some alpha, or you think that something can go viral and you want to share that, that's the best way to share something about the real world, at least how we see it. So you will have a shareable link.
And then how does liquidity get created around that spot? Is it, do you guys have a bonding curve, or what's the mechanism?
Yeah, exactly. Under the hood, we're using PumpFun, both Launchpad and DEX, so that we'll create a token on it, and you will have like bonding curve, like a standard meme coin.
And then in addition to, hey, me seeing these things, what else? What other social engagement is there when Mike Dudas logs in for the first time, has never used it before? What else am I seeing about the spot in addition to the token?
Yeah, like when you open an app, highly likely you will notice about this app because you saw a link somewhere on X from your network. You also can connect your X.
Got it. So I'm not coming in cold.
Yeah.
The point is you're looking to acquire folks. Okay, through shares.
Yeah.
Okay.
Yeah, I think I really do love this concept at large. Like, I think Google Maps is like a great social network that people like underutilize. Delphi, we actually invested in this app called gg.zip that kind of went very viral for its launch, but ended up just folding, didn't work out. But it was basically like Pokemon Go with locations. And it wasn't doing this with like meme coins, but more so kind of like NFTs and rewards and things like that. I'm kind of curious, like two questions I have. One following Mike's question is like, so it follows, it goes to like Pump Swap, right? And everything like that.
Yeah.
So that means that you don't need to actually be there in person to get exposure to that place once it's minted. But the only gamified component of the IRL component is you need to be there when it is minted. Like to mint it, you have to be there in person. But then to get exposure to like the Statue of Liberty, you can just buy that on Pump.
Yeah, exactly. So you don't have to be there. You just can like explore the world and
I see. That's the part I don't know if I love that. I actually think you could probably make it way more gamified and fun if you do the opposite, where to basically play in this. Obviously, there's going to be a big friction, right? You kind of like, you have to be in New York or come to New York to like get access to locations in New York. But I think that would be way more interesting than just, letting anyone. Obviously, the speculative asset is like way crazier, but I think that's something that you guys should think through. And then my other question was like, I guess like your go-to-market, like doing the whole world, I think is like also going to be a bad idea. Like, you should probably start in like a specific city. Like, I feel like New York is probably like very like high up on that list, but how are you guys thinking about that?
Well, for the first comment, we think that based on our experience from Web3 gaming, we see that people are super lazy. They don't really want to go do check-ins, do any active actions. So we kind of scary to push them, to go to like a specific location, because highly likely like farmers gonna just manipulate with like geodata and do all these actions, while normal users will like struggle. So for that reason, we don't really want to require them to go somewhere. For geo like restriction, we think that that's one concept that to launch in New York City only, but we believe that it's better to launch in a sandbox mode and focus all the marketing on New York City. That's exactly how we see it. Because finally, like crypto Twitter knows better, and maybe they will find completely different pattern as we designed. And we just don't want to limit it. So we want to launch in a sandbox mode, but focus all the marketing on NYC.
Got it. Yeah. I think the first point, like, yeah, I don't really get it. I think like friction is kind of something underutilized. I think it's actually like it can be a huge advantage if you use it right. Whereas I think like if you actually let, people ape this from whenever. And by the way, another thing that you can do is like make people do certain actions. So it can't just be sibled by like a VPN or something like that. You actually have to go, get a code from the barista or some shit like that. Right. But yeah, I think, I don't know. That's what I would think through. And yeah, the second part, I think that's also going to be like, you basically have like low liquidity of like places, right? So if you go on a map and it's worldwide and I'm in like Lisbon and no one's really played in Lisbon, it makes the game way less fun, right? Or maybe, I guess, yeah, I'm curious how you're thinking about that. I guess like one person will just go and mint every place in Lisbon and like squat on that.
Yeah, why not? Maybe they will do it, but we'll still have like very few spots that we can show you on a map, just because you can like cope with like hundreds of them. So we will show top like 20 spots on a screen or even less. And I mean, there is no big difference if there are like hundreds or millions of them. It's still the question.
So your point is, can there, just like on Pump, there's like, 100 Xi Jinping tokens.
Yeah.
Can there be 100 Statue of Liberty tokens? And it's just like, who's the most credible?
No, we plan to actually cope with this. So we're gonna turn off copies, so that we'll keep the originals, so that people can be sure that they like gonna spend on like the right spot.
Is the Statue of Liberty even, is that like what a spot is, or a spot just like a GPS coordinate?
It's gonna be
spot?
The spot gonna be GPS coordinate.
Okay. So it could be a shop, it could be anything. It's just
anything, just like in the middle of nowhere, like in the random desert sport, whatever.
Okay. Have you launched yet?
It's in internal beta, gonna switch to like private beta invitations only like in a couple of weeks.
What are the most popular spots? Or so it hasn't launched at all?
It's internally, so it's like based on our
just the team, yeah.
feelings, yeah.
Okay, got it.
But different people have different patterns, to be honest.
Yeah.
Yeah, two things come to mind for me. I actually think what Anil was saying holds a lot of weight. And I think maybe you could use the physical location to get access to the token as a bootstrapping mechanism, because if you have to do that, the token appreciation will happen much slower, and it actually requires like friction for the user, which I think is good, right? If it's like you have to be in New York and go to this place to get access to a token early, people will do that, right? Like there's an incentive for them to do that. And I think you get a lot of people talk about it if that's the case. And I think that helps it go from 0 to 1. Like people will start to talk about the app. The other thing that comes to mind is I remember like when the Notre Dame Cathedral was burning down, right? Like if someone knew about this app and like was the first person to see that, they would go and coin that right away. And then as people think that the news of this is going to get bigger, they'll buy the token. Like I remember New Jersey Drones was like this token I started buying when like the drones thing was happening. And my thesis was like, well, Joe Rogan's going to talk about this. Like this is going to be much bigger news than it currently is. So I can see like, I think the friction in person is actually really good for bootstrapping, but to capture those global events, maybe opening it up would be a better strat.
Actually, I have some ideas how we can use like physical location to amplify. Yeah, thanks.
I could go really quickly. I know we're over. I would just give 2 pieces of feedback. One, just launch as soon as you can. The feedback from us is much less meaningful than the feedback from actual users. The best like consumer products in general have often pivoted 5 to 25 times before they find something interesting. And then the second thing is, I would be curious if you could try to like incentivize some sort of real world like behavior, I think the era, there's probably no more pump funds left where you're just launching a meme coin for the sake of it. Like if there's some benefit to the locations or the shops or something, for people coming, even Pokemon Go is like that. It started as a fun game and now it's mostly for mapping and it's for like real world utility,
Yeah, almost between like a like Blackbird and Pump Fun. like the mix of that could be interesting.
Yeah, we have some ideas. Yeah,
That'd be cool. Yeah.
great. Yeah,
All right.
thanks.
Yeah.
Thank you, man. Yeah, appreciate it.
Let's give it up for Anatoly. Our next presenter is Yuri from Wallchain Quacks.
Hi everyone, I'm Yuri, co-founder of Wallchain Quacks. First of all, I'm glad I have a permission to speak at Permissionless today. So it's a go-to-market session. I'm going to describe how we got to our current market position and what are our next go-to-market plans. Ironically, it turns out that the core idea, the concept of what we do at Wallchain is help other companies go to market and grow their market share. More and more companies start doing it with through creators. They want more people with audience to share content about them, to get their distribution, get distribution from people with audience, creators or other like researchers, people with audience. And it turns out to be a very complex and manual process. So firstly, you need to find like many people, targeted creators or just people with audience to work with. Second, you need to connect with them and make deals and make sure these are good deals so you don't pay like for fake followers and fake engagement. And third, you need to control the content, the whole process to make sure that they deliver the value you expect. And at Wallchain, we take all of this and automate it with LLMs. So firstly, companies work with thousands of influential people from day one. AI gets them automatically matched based on their preference. Like they want people interested in Bitcoin, it gets targeted to people interested in Bitcoin. So firstly, it's instant. No need to spend months and make deals with thousands of people. Second, they save up to 30% of their budget. So they don't need to hire like a big marketing team or work with an agency to manage and work with all of these like creators. And third, they get better content because it's impact-driven compensation, performance-based reward. We have applied this strategy to ourselves. We got more than 60,000 people signed up. Most of the top-tier people on crypto Twitter signed up. Many of them posted about us. It got us in the top week to top one PTG company by crypto Twitter mindshare. And we're using it for other companies, to help other companies grow. You may be wondering, what makes us different? What makes this solution unique on the market and help us stand out? We recently released programmatic mindshare leaderboards. We took a concept from like a traditional companies that had organic healthy growth, how they work with people with influence, with audience, and it's a mutual selection process. And same with our programmatic leaderboards. Companies have flexible setup rules to choose which companies to work with, which creators to work with. As a result, it gives 5 unique advantages. So, firstly, it can completely eliminate the AI slop and the junk content that traditionally comes from like all of these InfoFi companies. So it eliminates junk content because only selected people post content. Second, it's more attractive for people with really high influence because they get directly connected with the company and the company signals that your content is valuable and it's more direct connection, more guarantees for reward for highly influential people. Third, it's a better chance to stand out for small accounts because there are like 2 million small accounts on crypto Twitter and everyone is posting some random content. They don't have distribution. They cannot stand out. But here, companies can choose small accounts based on their previous interest, based on their like on-chain activity, something that small accounts can stand out with. 4, it's suitable for small companies. So more companies are small on the market in general. And this model works with small companies because they can start only like with 3 active community members and with a very small budget. So it suits small companies. And 5, it suits Web 2 because it copies the traditional model from Web 2, how companies work with creators. That's basically it. Would love to know your feedback and hear your questions.
Thank you. Yeah, I've thought honestly way too much about this concept overall. I think Kaido is one of like the breakthrough concepts that got tokenized in crypto this year, and there's going to be a lot of derivatives, and I think they will get better over time. But just to understand the kind of the core difference between Quacks and like earning Yaps is that as a company, I can handpick the people I do and don't want to receive points. As like, if I'm a company and I pay for your service, I can handpick the people that can and cannot earn. I think they're called Quacks, right?
Yeah, so we have the traditional public matcha leaderboards, which are like quite familiar to everyone. And as you mentioned, companies can set up which creators, which like kind of people they want to post about their product. And it can be like whitelisted list, like pick up, or it can be programmatic. Like you can say people who have previously been interested in Bitcoin and have and are above this level of influence. So it's only accessible, only targeting people with like high or medium level of influence, or people who have like some volume on some protocol or hold some kind of token.
And then the other massive problem, actually, I think it's an amazing market that companies are taking advantage of. It's also killing the thing that I love, which is crypto Twitter, for better or worse. That's just like the way it's progressed. You mentioned being able to prevent the AI slop that we've seen in the past. Can you talk a little bit about the mechanism for that?
Sure. We struggled with it significantly. The challenge with AI slop that most companies, and we tried it previously, to solve with an algo. To improve the algo to detect AI slop and eliminate it completely. Don't reward for it. And even when we detect most of the AI slop and don't reward for it, people still continue doing it because they like don't immediately understand that they don't get rewards. They start pushing a lot of content with the hope to get some reward. And some go much farther. They run like farms with bots that like produce junk content 24/7, and you can't just stop it with an algo. But we can stop it with permissionless leaderboards because those people, they don't even have access. They don't participate in it at all. And those leaderboards, they may not be even visible. Most people may not even know that they exist. Similar how in traditional models, when there are like creators and company, people don't know which creator is partnered with each company, what they deal under the hood and so on.
I had a quick question. So the interface, when I played with it, it looks a bit like Kaido-esque, right? For the leaderboards, if you're a creator, but you're saying you have this whole like you're going to companies too, you're doing like campaigns, like kind of Galaxy-like. Is that the idea or no?
What about Galaxy, sorry?
You know, like Galaxy, it's similar to that too, right? Where you're going to like a monad or something.
Like quests, you're saying.
Yeah, you're doing quests, right? Is that, or no?
There is a similarity with quests. Companies try to solve the same problem. They want to get more people with quests.
Yeah.
They want to get more people with us. The big difference is that we can filter out what kind of people to attract to the company.
Sure.
And it's much more organic and healthy approach.
Okay.
For long-term sustainable growth.
So the filtering, like that's been the biggest problem with Kaido, which, is, I think, started to deteriorate into, it's not AI slop, it's now influencer slop, right? It's just people basically. So maybe walk us through how you can prevent. Is it opt-in? Are you rating people? Do you have something that gets a little more sophisticated? Kaido has an incentive, I think, right now based on being, 10 to 20x larger than any competitor, just to churn through content, get big budgets, and amass a war chest. What data or like how are you helping a project from day one self-select into the right people to talk about their project?
Yeah. So the question: how do we help projects at early stages? And
meaning how from day one do you make sure that you have high signal? Like you're not going to be able to compete with Kaido, right? In terms of sheer volume and amount of people who somebody could reach. So what's your wedge and how do you identify the high value folks that projects should be working with?
How do we select high value folks for the project to work with? Yeah, so firstly, there is a focus not only on our community, but community on the project. For example, we partnered with Ape Chain, launched the leaderboard for them, and their community was like many times larger than us. We don't bring them much new people. It's here is a tricky part about InfoFi, which I believe many people get a bit wrong. Many companies and people think that the value is like get new people, get new community. But the main value here, which is more long term, is activate existing community and make it like stick and organically grow for the long term.
And is the project so the Ape Chain example is difficult because that's an established project and you're trying to re-engage and bring new people in. Are you helping new projects? Okay, so how do you then help them where, hey, I don't have a big community, I'm trying to create one, introduce my product?
So it's like zero community, not really helpful, but if they have like 5-10 active members, it can already work. The leaderboard can be only visible for these 5-10 members, and they are already incentivized to post about the project. And once it grows, more people get access to the leaderboard, whitelisted for the leaderboard. Someone becomes interested, they get whitelisted. They become a kind of insider growth group of people.
Yeah, I quite like this programmatic piece. Like, I'm kind of curious, like when if you are a new community, to Mike's point, like, can you do something where you're almost like vampire attacking attention from another similar protocol?
Yeah,
right?
like a lookalike from
I mean, I don't know if that's going to be a great thing, but like, is that a feature you offer these new communities that maybe don't have a big community yet?
Vampire attack,
like say you're a perp dex launching and you're like, hey, I want to get people who are really bullish Hyperliquid to start, either talking about or trying out or using my protocol. You said earlier that you have these features where you can pick, I want these users that have X amount of TVL on this chain or this protocol. Isn't that kind of like the intention of it? Or like, why do you even have those features then?
Yeah, it's possible. If there's like new upcoming perp protocol or another like trading sophisticated app, they can whitelist the access to their community and community of other like similar projects. And they can also filter it like by level of influence and potentially by trading volume or something else.
Got it. And then you said that, your target audience, like obviously I think like Kaido's like low 6 figures every year or something like that. So a lot of like new projects may not be able to afford it. What is like the pricing structure for these new projects that are working with you guys on it?
Pricing structure? So it's value based and it can start very low, like from monthly subscription, which is like very low numbers for the project with a small group just to start out. And as they grow, they can opt in for higher like growth plans. That's basically our go-to-market strategy. Partner with early projects at early stages and grow with them.
Yeah, I think this, to me, honestly, this concept is very similar and could be of the same magnitude of like when Instagram switched to targeted advertisements instead of random ones. And it just made cost per click go up like infinitely, right? It created a much more efficient economy. Like, I think this unlock is similar. There's a lot of problems that exist with Kaido. I know it's go-to-market workshop. So like something I would think about is if you have a way to index accounts and then for tweets that they would earn quacks for, if it's off base from ways that they have previously talked in the past, like then it wouldn't count. Like basically I can't just go out because I have a bunch of followers, AI something about the project and then post it, because that's not how I post for my account. But like I still might score very highly. I think whoever can index at least the larger crypto Twitter accounts to start and then start modeling based off of that, like will really take away and break out and kind of own the vertical. Because like Kaido was first, they showed everyone was possible. That's a big advantage and a big lead. But there are a bunch of problems, right? Like for 2 months, everyone was talking about Kaido to earn yaps and they're like, this is a joke. Like this was my favorite thing in the world. I used to spend 4 hours a day on this. Now I can't even read my timeline. So like if you could even go to market with that tagline, right? Like we're fixing the AI slop of XYZ. But yeah, I think you probably have to do account specific behavior, which you're going to have to pay a lot for the X Enterprise API to get all of that info. But I do think that is probably the solution. And I don't see why it breaks when you get to that breakthrough. Like, I think that fixes the biggest problem.
Yep, thank you. Yeah, and the targeting ads analogy, I didn't think about it, but that's really sounds quite relevant here.
Yeah, I think it's very interesting. I mean, one of the big use cases of tokens in general is like marketing benefits. You know, you're incentivizing your followers, and you guys are playing in this like yapping as a service category. One piece of advice, I think, Dudas' point about filtering is really, really important. I mean, we're all like, filtering is really important. Getting quality high in the beginning. One advice is there's this mantra in like Y Combinator that says like do things that don't scale in the early days. So, maybe at scale you could do like programmatic AI to like try to get rid of the slop. But I would just try to do it really personable, like really in a curated way in the beginning. Like reach out, cold DM influencers and KOLs that you want to be on a specific campaign and sign them up like by hand, right? And review their content by hand and almost be like a consulting organization, like a KOL campaign as a service to the initial customers. And then you'll understand exactly how it works and you'll make sure that there's high quality in the early days, right?
Yeah, makes sense. You become more premium and like hand glove service.
Yeah, I mean, literally, that's projects ask us for that, right? It's like, oh, you're going to invest. Can you bring us a bunch of KOLs and people who are going to be really early and care about the project? I think that most of the InfoFi stuff I've seen doesn't feel authentic. It's not people who have, both, I think a deep, authentic on-chain presence matched with a deep, authentic online presence. And that's like that real sweet spot that a business like yours is looking for. So if that's your true north, finding those people in that little, Venn diagram of matching authentic on-chain and authentic online, you have a chance to win. My question is, we're almost running out of time, but are you going to have a token? And how do you think about that? So, every VC is going to ask you this, by the way. So.
I can't comment on it publicly. What I can say is that we have like everything we have right now because of our community. We love our community and we will make sure that it's mutual.
So he's getting it. He has a token, by the way, coming soon. All right, cool. I just like to demonstrate how these meetings go. And
he's like, Mike, it would be really good if you tweeted about Quack It right now.
I'll let everybody know Quacks are coming. Quack widely,
G-Quack.
fervently. Yeah, I signed up for Quack last week. Not to accumulate my own tokens. I'll gift them to you.
Awesome. Thank you, man.
I think we're over time. Yeah.
Thank you, folks.
Cheers.
Thanks, Yuri. And our final presentation of the day will come from Sam, and he will be presenting Guardrail.
Hello. How's everyone doing? Really excited to be at Permissionless. I appreciate the chance to talk to our sharks here, Shark Tank style. I hope we get some term sheets at the end of this. But first of all, really great insights so far shared. Really just making notes furiously on the side. I'm going to change gears a little bit and talk about a slightly different problem. Go from B2C to B2B in the go-to-market theme. So, quick show of hands. When I say Bybit, what do people think about first? The exchange or the hack that happened in February? If you think about the hack that happened in February, that was a $1.6 billion hack. For context, to put that number in something that we can all relate with, in December 2020, the entire DeFi TVL was 1.5 billion. So a single hack this year has wiped out more than the entire TVL we had 5 years ago. Fast forward the progress we've made in DeFi, we're now north of 100 billion in TVL on DeFi, but we're still at about 5 billion that have been lost to hacks. And I don't think this is an isolated problem just to Bybit. For every $20 that has come into DeFi today, $1 is lost to hacks. And it's not that these teams kind of don't take security seriously. If you look at the hacks that have happened, we have seen 100% of them have gone through a security audit. So we're talking they've spent from 100K all the way to $1.8 million on security so far. And yet 100% have been hacked. So stats aside, for me personally, I think it's really important. We're here to grow the pie. And I don't think the pie is going to grow when users put money in, not knowing if it'll be there the next day. I think trust and security is going to be a big unlock. And we're seeing DeFi grow, but I think we all want to see it scale to trillions. And I see security being a core part of that. Where do I fit in? I mean, personally, I've been in more than 220 war rooms so far in Web 2. And if you look at the Web 2 model, we haven't seen a hack north of 100 million in quite some time. In general, we've been able to get a grapple on this problem in Web 2. And the question right now is, what do we do to bring those learnings to Web 3 so that we don't just replicate it, but go one level further? Bring in the best parts of Web 3, but still have those Web 2 learnings. And that's what Guardrail is. We're building a modular, always-on, opt-in security platform that is going to be able to protect you from hacks the same way that a Datadog or a PagerDuty would do in the Web 2 context. So with Guardrail, teams can actually have every transaction that touches them, their assets, or their users be monitored with our platform, be simulated in real time and ahead of time before submission to the blockchain. And in the event that it's a hack, actually have us real time respond to the hack that would be impending. You can think of this again like a Datadog or a PagerDuty, but built for crypto. And we built this closely as an MVP with the Li-Fis and Pendles, working with a couple of blue chip teams. We launched our V2 product in December, so we've been around about 6 months. We have about $1.6 billion that we're currently protecting for some of the largest teams out there. And we're looking to grow, so we have one team a week that we've been onboarding on average. So happy to take any questions.
So your customer is protocols that are securing value, and what type of access do I need to give you? Is it is it the same for everybody? Do I have choices? Just walk us through that.
It's a great question. One of the things that I like to stress about Guardrail is we want to be really modular, and that's important because crypto is very composable, right? So some risks that may be really huge for protocol A might be a minor risk for protocol B, given their design.
Li-Fi is very different than Bybit.
Exactly, an aggregator versus an exchange. So to your point, I mean, the integration what we've done is we've abstracted out some of that complexity in the nuts and bolts of bringing data in and running a check. Now from there, we have ready-to-go checks available for every use case, whether you're a bridge, whether you're a stablecoin. So some teams use this to monitor their oracles because that's a.
So are you able to give us maybe a quick example that laymen could understand?
Certainly. Let's pick up an example of a protocol. Let's talk about Aave, right? Aave has a couple of engineers that have built the protocol, maybe one or two security researchers in there. If we do the threat modeling exercise altogether here, risk can come in from a couple of places, right? It can either come in internally, like somebody within the team could choose to do something malicious, somebody externally, or it could be a Web 2 risk that has a Web 3 consequence. So if you bring in a threat model like that, we've got on-chain monitors that we run for the Web 3 side. We've got on-chain monitors that we run for looking for insider risk. And then we have a model that looks for off-chain data that could be an on-chain risk. So taking that as an example, we can essentially map to 100% coverage or close to that and then continuously backtest it.
And by the way, are you defining what to track, or do they already have a model on what they're tracking and they tell you, hey, can you do this for us? So just...
I mean, I wish a lot of our teams had those models, to be honest. That's where auditors are coming in. So they work pretty closely with auditors. Yep. And what we've seen commonly is auditors are where it all starts, but often it just ends there, right? You get the snapshot, you post your audit, and then you're hoping for the best. And then there's a bit of a gap up until incident response. And that's exactly the space that Guardrail is playing in. We're plugging in that gap where we're continuously, every day, every week, every month, watching every transaction. We were monitoring Pendle when they had 0 TVL, and kind of all the way through, we've kind of watched that growth happen. So that's one of the advantages of real time versus one time.
Very cool. And then just really quickly, how do you guys get paid?
It's a great question. Really early so far in iterating on the pricing model, we've kind of learned from the Datadogs and PagerDuty model and just said single chain, single protocol has one cost, and then multi-chain, multiple protocols has a second cost.
Yep. And then evolve from there as you become more systemically important.
That's right. So one thing is we want to price at least half of an audit. because we think while an audit is great, teams have already feel okay stomaching that price. So we just want to make sure it's at least twice as valuable at half the cost to begin with.
Sorry, the protocols pay you or the users?
The protocols pay us.
Got it. Okay. Okay, cool.
And how are you finding the protocols to work with, or are they finding you?
It's a really good question. So
I'm asked a lot of really good questions.
So how
Don't
are
worry,
we?
they're all dumb questions, basic, but like I appreciate it.
So how are we finding them? Definitely do things that don't scale is how we started. Quick story: we closed our first customer because I happened to be in Montreal. I had to learn how to pitch blockchain in French. Met somebody who had just come off of a hack. So unfortunately or fortunately, we've all been through those scares of a rug pull or some kind of scary thing when you wake up and you see something, that could be a wallet drainer on your wallet. So, happened to be in Montreal, spoke to somebody who had a really urgent need. They became our first customer. We're part of Alliance, which is another accelerator, which gives us access to a bunch of different teams, but very much do things that don't scale. Conferences like this, we meet folks that are looking to up-level their security. We give them access, and then it kind of goes from there.
Yeah, really cool. I think I think it's a good product because like fear is just like really good to sell, right? Are you like a substitute or a complement to like other, say, auditing firms, security firms, etc.? How do you kind of pitch yourself there?
It's a good question. Personally, I would say the whole ecosystem is developing pretty quickly. We have auditors that are launching tools. We have tooling companies that are doing pro services. So we're definitely pretty focused on being a SaaS product. We want to give our platform to as many people as they want it. And very often we have teams that come in with very clear approaches where they can self-serve and build your own monitors, but they often need some more support from us. We're building those partnerships today with a lot of the security providers. But I can tell there's definitely some tension, right? Because they themselves are figuring out their roadmap. So we're definitely really open to partnering, and we work. A common channel for us is getting auditors sending us teams or incident response teams that want to kind of work off of Guardrail as a channel.
Cool. Yeah. And I think back to the pricing thing that, Mike brought up, a couple of years ago, we were working with some auditing firms for some the incubations in our labs division. We just thought the auditing whole sector was kind of broken as far as the pricing goes. So we designed this kind of pricing model that none of them actually adopted, but I quite like it still. It's kind of stuck in my head where essentially you can you charge a fraction of what most of these auditing firms charge up front, because usually they charge these huge fees and then they kind of fuck off, and once you get hacked 3 months later, they are just whatever, we already got paid. Essentially what we had was either say a fee that they're just paying out of the money that they raise, or maybe even fees based off the revenue that they've been able to secure based off how long they haven't been hacked for. But you basically get milestones, and some of these auditing firms, if you really believe in your work and say, hey, I think we do a really good job, we're going to keep monitoring this, and if you don't get hacked in either the next 2-3 years, you get 3 to 5x the payment that they currently do. And I thought it was a really good model because they end up making way more revenue. But again, I think a lot of these auditing firms don't care to put their money where their mouth is. I think that may be some type of package that you kind of bring to certain auditing companies where you guys are the monitoring, right? And then you can kind of ideally help get them more comfortable with potentially capturing that upside. I don't know what you think about that, or if you think these auditing firms are just gonna kind of laugh you out of the room.
No, certainly. I would say, so just to kind of reiterate the thesis here, which is don't necessarily price up front and then you're hoping that the person would come back to you, versus just kind of building that relationship and trust and aligning yourself incentive-wise with the protocol. It's a topic that comes up very often in security. It's the reason why even something like insurance is a tricky topic, since Web 2 has figured out insurance, but Web 3 is still figuring out insurance. I was going to mention really briefly. Forgot where I was going with that. Right. So I just remembered. With monitoring, I think it's you think about the Metro Mile analogy, where it's you don't necessarily have to charge a lot up front for insurance, but you kind of pay as you go. So maybe you do kind of hire a security researcher and you're doing things very risky, then okay, that kind of increases your premium versus you're doing things very safe. So I think it's a great idea. Haven't seen too many people run with it yet.
How do you think about differentiation versus the competitor? Is it a sort of similar product to a Blockade or Hexagate?
Yeah, I would say there's some similarities, since at the end of the day, we're all looking at blockchain data and trying to find the needle in the haystack. Where we like to differentiate is essentially what levers we give our customers. You can imagine there's a spectrum of kind of fully do it your own security where you get your own blockchain data, build your own databases, and then define checks all the way there. Or there's just like the check the box solution, which is kind of hope for the best and have the platform do all the heavy lifting, and you're just kind of getting the check box. So I think for us, we have a very opinionated approach on being very hybrid, where we want to work very closely with the team to harness their intelligence, but then work very closely with our researcher to harness our security intelligence. I think that's a pretty unique model in itself. It's how you look at the best like Web2 companies that have kind of been approaching there.
Cool. Yeah, I'll give some high level feedback. So we've been trying to invest in cybersecurity for blockchains for like a decade plus, because it is one of the biggest outstanding problems. Actually, if you look like, we kind of solve scalability more or less. Now we just like security is one of the biggest ones remaining. It's just so, here's the problem I found in a lot of the portfolio companies I've backed. Cybersecurity and hacks are sort of this existential, really big risk. But if you're a first-time founder of a protocol yourself, you often you don't really think about it, how it applies to you. And in startups, you're supposed to solve current problems. But the problem is with hacks they are a future problem, right? So we often see that the projects they just don't really care about hack risk until it's too late. And then when it's too late, sorry, your customer's dead. I mean, they're over, right? They're kind of done, for the most part, usually don't come back from a hack. So I don't know how to solve this, to be honest. I wonder if there are ways to experiment with like selling to or catering to the end users themselves, big crypto whales, funds, things like that, right? Because you look at auditing and it's successful because there's sort of, project kind of just do the bare minimum, to launch. And they're like, okay, the exchanges won't let me list if I don't have audits. The community will be really upset if I don't have a couple, and so I got to go 2-3 audits. I got to do whatever the bare minimum is, right? Because the users, they care. I mean, we're repeat game. Like we've been through it all. Everyone who's been in the space has been rugged and hacked. So if there is a way to target them in some way, and then if you monetize the users, you build towards what you monetize, right? So maybe if you go after them a little bit, it might lead to some drop off in revenue in the early days because it's less enterprise. But maybe it's more over time. I don't know if any of this resonates with you, but.
Yeah, I mean, all of that's pretty spot on. So the way we think about this is, the whole goal is to protect users and protect the investors who are bringing in that capital. I think about like a Norton antivirus, right? Like it's a terrible analogy, but like who paid for an antivirus, right? Until Mac started bundling it in, everyone now gets the default security. And for us too, the goal is to actually protect those end stakeholders, but we realize they're beholden to the design decisions of the protocol. And that's kind of where we decided to start. Like, let's give the protocol, they're the ones who are taking on the risk. They're up at night, they're the ones on call. So we want to give them better tooling, but I think we see that as a path to be able to kind of support the end user for sure. And for us, I think the real-time monitoring and simulation is great, but we kind of see that evolving into having an on-chain prevention system. And not everything needs to be preventable and secure, right? Some things, can totally stay the way they are, but maybe there's certain pools, certain vaults that you ape into that actually have certain security guarantees that you can ensure that if a token depegs beyond X percentage, or suddenly an attacker comes in and brings a bunch of laundered money, you can kind of have your position unwind. So that's kind of the future that we see. It's a very modular, it's very pick your own adventure. And to answer your other question of how do you make somebody feel secure even if they're not getting hacked, right? Because you're not getting hacked until you are, and at that point, it's usually too late. So we're experimenting on this all the time. I think one good example is a couple of our customers are decentralized DAOs, and from them, we do like monthly reporting with them in the governance that shows, what's our true positive rate, what's our false positive rate, what have we kind of shipped in terms of adding security to it. So I think that changes security from we're secure or we're not secure to every month it's getting better and better, right?
Yeah. Are you showing evidence of exploit prevention? Because that's the biggest thing. My concern with any new security solution would be, I don't know if it works until it doesn't, right? So how do you guys get that proactive, confidence in the buyer?
Certainly. So we do that using a lot of back testing that we built into the app, right? I think these attacks can feel like absolute snowflakes, like being very, very unique, but then you actually draw down the characteristic patterns and we can show like demonstrable results over time. We let our customers run the application without any intervention. Also, we call that shadow mode, and that way you can kind of run it in simulation, view what would happen, even throw in some testnet transactions and view what the system would do. So that's some of the examples there.
But is that sophisticated enough? I mean, most of these exploits are people who are frankly better users of, on-chain DeFi and other primitives than anybody else on earth. And that's why they're finding these like wildly exotic. So again, how do you go a level deeper and say, like, what is your credibility signal to folks?
Yeah. So the question is, even if you're good, how good are you? Right. Because
right. Like North Korea is really good. Like their like nation state basically the survival depends on being able to extract money from these systems.
Precisely. So I think the way to think about this is like there is no silver bullet, right? There's no way that you can actually provably get 100% security ever, especially against like a nation state adversary. I think the best case here is you invest in it enough that you're not the target of that attack. And we've seen a lot.
That's interesting. So it's that like I'm trying to get to a mental model that would resonate with somebody. So it's like me slapping the ADP security sticker on my mailbox, which is a little bit of a deterrent, to the guy who's driving by and deciding which house to rob.
Exactly. Because today we're not actually doing enough to make the attacker's life harder. We're actually innovating at such a rapid pace that our memory, for example, is like getting refreshed basically every year. So a hack happens. 6 months later, the same hack is happening. 8 months later, the same hack is happening. So we can start to kind of push the attackers to evolve if we kind of get this like network effect of getting smarter over time. And that's kind of what, using something like Guardrail, you'll get that compounding intelligence. Of course, attackers are going to keep evolving,
Yeah, I just think just like anything, you need a mixture, like we're talking go to market here, of sort of mimetic and signal value combined with substantive value. And it sounds like you're thinking about both of them.
Certainly.
Yeah, I mean, I think the product makes a lot of sense. I mean, you guys already launched. Seems like you have already gone to market. I don't know why you're up on this panel, but I think there is an opportunity.
He wants more term sheets, he said.
yeah, that's true. I think there is an opportunity for like a death water type approach in marketing for security companies in crypto, where all of them look the same. I'm sure your site probably looks like every other one out there. And I think, to Mike's point, I think the ADP thing is actually like a really good example. Like, my dad has like every security thing on the lawn. I'm like, Dad, this is like dumb. But I do think you keep bringing up monitoring the situation and everything like that. I think that's like a meme you guys should embrace. Like, Dad, how do we not get hacked? And then it's like,